Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, brought to you in association with Bank of New Zealand. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with a roundup of the financial market fallout from the Christchurch earthquake. It turns out financial markets aren't as worried as some people thought. The New Zealand dollar only fell slightly on the news on Monday morning. In fact, is back where it was beforehand at 72.2 US cents. Economists are saying we're going to see some short-term pain, perhaps a hit to GDP in the third and fourth quarters. But through the rest of next year, there's going to be quite a bit of construction spending and repair work being done to infrastructure in Canterbury, which could actually boost GDP. Also, Standard & Poor's came out yesterday and said that New Zealand's sovereign credit rating, AA+, will not be affected by the Christchurch quake, in large part because the government has relatively low public debt and it can afford to absorb the problems. Also, our insurers are well covered and are reinsured with overseas insurers, and the EQC, the Earthquake Commission, has plenty of cash on hand. In fact, the Prime Minister says the Earthquake Commission won't need to be selling bonds, New Zealand government bonds, on the market to help pay for the Christchurch earthquake recovery work. Now that's good news for bond yields, because if the Earthquake Commission has to sell New Zealand government bonds, that's likely to push up mortgage rates and wholesale interest rates, and that hasn't happened. In fact, they only rose very slightly yesterday, nothing too significant. Meanwhile, on the stock markets, it was actually good news. The stock markets rose yesterday. Fletcher Building, the biggest stock on the stock market, that rose in expectation it will benefit from some of the working that has to be done. And Steel and Tube, its share price rose. Tower, the insurance company, however, it fell. Retailers such as The Warehouse and others reported that their buildings aren't too damaged. In fact, the warehouses in Christchurch are up and running again. Small businesses, though, in Canterbury will really struggle, particularly those that depend on constant turnover of cash, particularly small retailers and shops in the centre of town, which obviously has been closed now for 3 days. There will be cash flow issues that the banks and others have to deal with. And now there's the massive task of dealing with the claims for insurance. More than 100,000 claims are now expected to a combined task force set up by the Earthquake Commission and the big insurers. The key there for the Canterbury economy and for the wider economy is how quickly cash can be pumped into Canterbury. I'm Bernard Hickey. That was 90 at 9, brought to you in association with Bank of New Zealand.